Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York on Thursday, February 25th, 2016, and this is the daily report for gold and silver. We do have a mixed bag in the precious metals markets today. Gold trading higher, silver off a little bit. We're looking at current gold ticks at 1235 and change. It is traded to a high of 1243, so just about $10 shy of yesterday's high, low 1221. So we're also having a reduced range on the day, but we are trading approximately $6 higher on the day. So traders, the first chart that I do want to look at on today's show is a daily chart. It is in Japanese average format. It's also got our current Elliott wave count and our double compression triangle as this market did come down and make these lows at about 1051. What I want to focus on today is really current levels of support and resistance. Of course, we're trading right now roughly 1234. We are long from 1217. Stops are under 1200. When we take a look at the bigger picture, which is what I'm attempting to do here, this green line represents what I believe is ultimate support in the market right in this area, and it comes in just below 1200. There are quite a few areas, of course, in which we can see this particular price point making some sort of sense. You've got this top right in here. Of course, right through here, you get a pretty large congestion area. Not a lot of data can be extrapolated, but you do have these lows here, here, and here. Now, they're rough lows because you can see on an intraday basis, it did go into this area. So as I said, stops below 1200, they should be roughly at 95, 92. We're going to move them up as the market moves, or I should say, if the market continues to move in the various stages that we're looking at. Now, our current level of resistance sits at around, call it 53. It's these series of tops that we saw the other day. You can see them right here. If we carry it through, you'll see some other areas. This top here, there it's definitely resistance. Here it is definitely support. So we've got some historical data kind of backing up this current area of resistance, although I believe this is really a minor level of resistance. I don't believe that we'll have difficulty getting through this area. We're already well above these tops right here. We're kind of matched with this top here and trying to take out this particular top that came in 2014 in October. So that would be the real level that we want to see it break through. Once the market, or I should say, if the market does break through this particular price point, we're going to want to look at our next major level, which sits right above $1,300 per ounce. And the primary technical area that we're looking at is this top that came in beginning of 2015, was the record high for 2015. Of course, 2015, a very, very tough year because it comes in, you can see this is the beginning of 2015. It comes in after a very, very strong rally and then really meanders lower to these lows that we got at around 1051. So we wanted first to see if it can break through this particular price point. That's our real target here. If in fact we can get this market to continue on this wave, of course, my sense is that's when we move the stops up under this area and we look to see if we can take out or at least challenge 1,300 per ounce. So traders, finally, I do want to look at a weekly chart. Same data points. It's basically a template from the chart that we just looked at, but we can really see on a much more broad scope the different areas we're looking at. First of all, this $1,200 area, my sense is that that's absolutely a solid area. We've got all kinds of historical data in which we've seen really strong bottoms in the market. Here, as I said, you've got the market breaking through. And then now I believe that we certainly have this as an area of support, resistance, roughly at 1,300. And this particular top is the top that we need to take out. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.